Good morning, everyone. It's Joe Bladdock here again. We're looking at the Bank of Canada interest rate announcement today. It's going to be coming up in about just a little over 10 minutes. And thanks for joining me today. Make sure you like and share this content. So if you know anyone that can benefit from hearing about this interest rate announcement today, they can get this information. I'll be covering off some of my normal aspects here today. Things like the metrics that the Bank of Canada uses to discuss and come up with a decision as to whether or not they're raising or lowering rates. And I'll be discussing as well what I think will happen with the interest rate announcement today. And let's get right into it. We only have about just over 10 minutes here today until the live interest rate announcement gets released. You may have noticed that the Canadian Mortgage Weekly podcast has taken a break over the last few months as I had run into some health problems myself, and I'm just getting back into live streaming at this time, with this being my first video back. So if I am a little choppy, please forgive me as I get back into the live streaming today. But let's take a look at some of the news that I've been seeing about interest rates. I love mortgages, and I love helping people with their mortgage. Specifically, if you're buying or selling or refinancing, I love helping people discuss what rate to get, what the best options are, and how I can help them to get the best deal possible. And as a mortgage broker, I usually can get the best deal possible because I deal with all the lenders in Canada, plus a lot of the non-bank lenders, the ones that don't provide checking and savings accounts, but only provide mortgages. And some of those lenders are often a lot more affordable than the big banks. So let's take a look at some of the news. And one of the pieces of news actually that I've seen is something that a lot of people are usually concerned about, but I haven't been hearing too much about it. But that is unemployment. And unemployment's actually been going up in Canada quite considerably over the last few months. Specifically, as of last month, unemployment went up 0.2%, which is a big jump compared to the last few months. We've seen unemployment slowly rise in Canada since about, let's see here, since about mid-2023. And unemployment was rising 0.1, 0.1, 0.1. Now we have a 0.2% increase. And the unemployment rate has gone from a total of 5.1%, where it was hovering at for many months in 2022 and 2023, to now being at 6.4%. So that's a big increase. And in a country with millions of people and millions of immigrants too, all of us are looking for jobs. And when there's less jobs out there, that's going to put financial strain on the markets, cause people to spend less. And the Bank of Canada does not like that. They like people spending a lot. And with that, unemployment has gone up, and that's going to be a major contributing factor as to how they decide where interest rates are headed today. So that's one of the aspects that I've been wanting to bring up with you all, is that unemployment now is sitting at 6.4%. And let's talk about inflation. Inflation's been in the news as well. I've been watching inflation as I've gone through my own issues in the last few months, my own health issues, because I'm a nerd like that. I love finance. I love mortgages. And I've been watching these numbers because they interest me. Get it? Interest. Anyway, let's see where inflation is at today for both Canada and the US. So in Canada, we see that inflation is at 2.7%. That's actually the lowest it's been since the interest rate hikes started. So great news. And it's within that 2 to 3% range that the Bank of Canada is hoping that interest rates stay within, not interest rates, inflation rates stay within. And Tiff Macklem, part of the Bank of Canada, has long said that he wants inflation to come back down to that 2 to 3% mark. And we are there. We've actually had inflation under 3% now since the start of 2024. We had inflation at 4% in October. My mistake, in August of last year. Came down to 3.1% in October. Then did spike a little bit in December at 3.4%. And then 2.9% in 2024 in January. And now sitting at 2.7% in June of 2024. So great news on the inflation front. It's going to make a big impact as to whether or not Tiff Macklem reduces the interest rate policy rate today. And I'll talk about how this will affect everyone in just a few moments. We have about 6 minutes until the interest rate announcement is released here, everyone. The Bank of Canada will release the interest rate announcement at 9:45 a.m. this morning, Eastern Standard Time. And they will also be releasing the monetary policy report as well, which will include a lot of direction as where the Bank of Canada thinks the economy is going. So just to cover off, if you're joining me now, inflation is down to 2.7% and unemployment has gone up to 6.4%. Let's take a look at the United States inflation, because whether we like it or not, the Canadian economy is largely influenced by the US economy, and US inflation has gone down as well. We are seeing inflation in the United States. At the start of the year, we saw inflation higher at peaking this at in March of 3.5%, now down to 3%. So the United States is actually quite lower than we were in March, and coming to those same levels that the Bank of Canada wants the inflation rate for Canada to be within, and that's that 2 to 3%. So it's very interesting to see that the United States inflation rates have gone down and the Canadian inflation rates have gone down. And if you're just joining me now, the unemployment rate in Canada also has gone up. We'll have an announcement here in about 4 minutes, just if you're joining me now. But in the meantime, I can tell you these three metrics alone are indicating that there's pressure on the Bank of Canada to decrease rates. Let's take a look at the bond yield. And the bond yield is a metric that a lot of Canadians and banks and economists use to predict where the Bank of Canada is going. It also helps price 5-year fixed mortgage rates. So the 5-year bond yield today is sitting at 3.28%. Still quite high from, earlier this year. We saw the bond yield hover around a low of 3.3%, 3.4% earlier this year, and then hit 3.3% in June of this year, and now we're back down to 3.28%. So actually the lowest it's been in the last 6 months. So this is also indicating that the market is pricing in a interest rate reduction. By how much? Very small amount. Looks like probably the smallest they can do. Usually the Bank of Canada raises or lowers interest rates by 1/4%. So 1/4% is 0.25%. And is that going to make a big difference? Not really, not a real big difference. However, we did see an interest rate reduction of a 0.25%, 0.25%, as of the last interest rate announcement from the Bank of Canada. So far, all four metrics are indicating a rate reduction. And if you're just joining me now, we're just talking about the metrics involved in the Bank of Canada's rate decision and where they are at. If you are looking for a mortgage as well, I'm a mortgage broker operating 14 years out of Central Ontario. I can definitely help anyone get a mortgage, whether it is on a refinance or a purchase or a sale and purchase. Would love to help you. And also we have resources for first-time home buyers to help first-time home buyers with grants, credits, and rebates when you're buying your first home. Let's take a look at another metric here. I like to take a look at the average national Canadian house price to see if that's going to play in, if at all, into the Bank of Canada's decision. So it looks like the average Canadian sale price right now, $699,117. This is for, looks like it's the May numbers. We don't have the June numbers here listed on the website that I use, which is wawa.ca. It's a great website. They provide a lot of statistics for Canadian national sales. So home prices have kind of staggered. They've remained steady since really the beginning of the year this year. We haven't really seen any growth. If we have, it's been marginal month over month. And overall, the house prices are stable. I have seen a lot of listings, however, hit the market. And listings are barely selling right now because I'm seeing a lot of houses come on the market where a lot of folks are coming up to their renewals and they're seeing their mortgage renewals go from 2%, or maybe even if you were lucky at 1% or 1.5%, and they're getting mortgage renewals around 5%. And some people who took out mortgages with B lenders, they're getting renewals at 6% or 6.5%. Okay, guys, it's time to make the announcement here. If you've been waiting, the Bank of Canada has announced what they're doing with the interest rate. As I mentioned, those metrics that we looked at indicated pressure for a downward trend in rates. And the Bank of Canada has, in fact, reduced rates by 0.25%, which is a quarter point. And now the policy rate in Canada sits at 4.5%, which is 4.5%. So if you're just joining me now, the Bank of Canada has indicated that they have reduced the interest rates from 4.75% to 4.5%, which is a reduction of 0.25%. So how is this going to affect everyone that has a mortgage? Well, if you're looking for a mortgage as of today, you're probably going to see rates come down a little bit on the fixed rate side. Banks will offer lower rates because of this. And if you have a variable rate mortgage, you'll actually notice these reductions right away. And I'll tell you a little bit how anyone who has a variable rate mortgage will benefit from this reduction announced today. If you have a variable rate mortgage with a static payment, which means your payment stays the same, your amortization will start to go back down. You may have noticed on your most recent bank statement that maybe your amortization shows 40, 45, maybe 50 years. So that's going to go back down now. And with the rates coming down, you'll see that amortization slowly creep back down. If you have a mortgage with a static amortization, which is a variable rate mortgage with a static amortization, which means you're still paying it off in the same amount of years, your payment will actually go down. And you'll receive a notification from your lender with this new payment in the mail. And if you're signed up for not e-billing, but e-statements, you might get a notification on your online portal that your payment is going down. So with that, as I mentioned, the Bank of Canada has reduced interest rates by 0.25%. It's great news for anyone in a variable rate mortgage. How about lines of credit? Is it going to affect anyone in a line of credit product? Well, because the Bank of Canada has reduced interest rates by 0.25% today, you will receive a notification from your lenders that hold your line of credit products that your line of credit interest rate will now be adjusted downwards by 0.25%. This will mean that if your line of credit, say if it's a home equity line of credit and the interest rate is prime plus 0.5%, which is quite a lot of line of credits out there, your interest rate will go down. Just a few months ago, prime rate was 6.95%. And as of today, prime rate will drop to 6.45%, because that includes those two rate reductions, one from today with a 0.25 rate reduction and one from May, which was also a 0.25 rate reduction. So great news for anyone who has a home equity line of credit. You're going to see your interest portion, that the interest is slightly lower on your line of credit product, and that your bank will charge a lesser dollar value for interest based on the same amount of money that you've borrowed. So for anyone that has a line of credit, you can always look at refinancing that back into a mortgage if you're looking for a mortgage broker. I have 14 years experience servicing clients in the Central Ontario area. I can also work virtually with you as well. But essentially, these line of credits will have a reduction in their interest rate and you'll pay less interest overall. This actually also applies to unsecured line of credit products. Unsecured lines of credit will also have a rate reduction because these lending products also have a rate that is variable with the Bank of Canada announcements. So anyone who's carrying a balance on an unsecured line of credit will have their rates reduced, and you'll see an interest rate reduction on your bill. This doesn't apply, though, if you've locked in your line of credit into a fixed portion with your lender. A lot of lenders try to do this by offering you a way to lock in a portion of your interest rate and locking it in at a fixed rate for a certain amount of time. And with that, that's usually a pretty good deal. However, with rates dropping right now, it's good to think twice about that and maybe discuss these options with your mortgage broker. If you're just joining me now, the Bank of Canada has in fact reduced rates by 0.25%, lowering the overall prime rate now to 6.45%, and the Bank of Canada's policy rate is now at 4.5%. They've also released a monetary policy report that I will just touch on here live and go into more detail on a future episode. But they did say that the Bank of Canada is continuing its policy of balance sheet normalization. So with that, looks like there's some mention of GDP that has been growing slightly, and stronger exports, recovery in household spending, and that GDP growth is sitting at 1.25% for 2024 and 2.1% for 2025. So they're actually forecasting a higher GDP for 2025 and 2.4% in 2026, and even higher output for Canada in 2026. So it looks like they're saying the strengthening economy will gradually absorb the excess supply out there in 2025 and into 2026. They also mentioned inflation is at 2.7%. As I mentioned at the beginning of this episode, it's within that 2 to 3% target range that the Bank of Canada was hoping for. And with inflation being now at that 2.2 to 3% range, that did put downward pressure on the Bank of Canada to reduce rates today, which they did. So if you're just joining me now, I'm a mortgage broker here, 14 years experience servicing clients all over Ontario, and I'm located in Central Ontario. And inflation did go down. Even though it went up slightly in May, they go back down to 2.7% in June, and that put downward pressure on the Bank of Canada to reduce interest rates. So if you're just joining me now, thanks for watching. This is a great time to always relook at your mortgage. You can always contact your mortgage broker if you are looking for a mortgage broker. I'm Joe Bladek. I've been working in the financial industry for 14 years, and I can help you with your mortgage, whether it is with your bank or any other lender out there. I work with the big banks as well as the non-bank lenders. So the lenders that don't have checking and savings accounts, we can offer slightly better rates through these lenders at times because they are specializing in specifically only mortgages. And if you're a client with poor credit or self-employed or have some unconventional situations, we even have alternative lenders that can look at funding your file if you're looking to purchase a home. Now, with renewals right now, this is really going to affect everyone's renewal. So let's talk about that. If you've received a renewal statement in the mail and your mortgage has not renewed yet, it's renewing still in 1 or 2 or maybe 3 months, it's a good time to reach out to your lender and get another opinion as of what their best rate will be. Their best interest rate may change at this point. You may notice that their rate offering will go down slightly. And you can always mention that as an educated mortgage consumer that you've learned that the Bank of Canada has reduced rates here on July 24th by 0.25%, and that the Bank of Canada also reduced rates in May of 2024 by 0.25%. And with those 2 rate reductions, you should be able to work with your lender or bank to achieve a slightly better renewal offer rate. Anyone that has a 1 or 2% mortgage could now be renewing into a mortgage that is 4 or 5%. It's important to get the best offer from your lender. And then once you have that best offer, it's important then to shop around and see what else you can find. Because you never know. If you find something else better, a lot of times these lenders will offer to pay for any costs involved with switching your mortgage to them. This could include things like legal fees involved with signing paperwork with a legal representative to switch your mortgage over to the new lender, appraisal fees, which involves assessing your home and making sure that it is in fact valued what it's valued at. And it could involve some administrative fees from your existing lender, like discharge fees. And these can all be covered by the new lender looking to take your mortgage on at perhaps an even better interest rate than what the best offer your lender or bank can offer. Always a great time to shop around. If you're getting a renewal, do not sign what is in front of you. The first offer is always the worst offer. And if you need help with your renewal, you can always give me a shout. I'm a mortgage broker with 14 years experience servicing clients all over Ontario, located in Central Ontario. So if you're just joining me here now, the Bank of Canada did announce at 9:45 a.m. that the interest rates have been reduced by 0.25%, which indicates that those with a variable rate mortgage will have some changes happening. Either your payment will go down or your amortization will go down, depending on if you have a static payment or a static amortization. Anyone with a home equity line of credit, which essentially is a secured line of credit, will have their interest portion on their line of credit be reduced. You'll see that notification come in the mail shortly. And if you have an unsecured line of credit, you will also have your interest rate portion reduced on that as well. Unsecured line of credits are usually a little bit higher. Instead of prime plus half or prime plus 1 in some cases, you might notice your unsecured line of credit is prime plus 3 or prime plus 4. So these lending products benefit even greater from this interest rate reduction. There are also some other products that will be affected, like variable rate credit cards and variable rate car loans. So these products are less likely because a lot of people tend to take fixed rate credit cards and fixed rate car loans. However, you are one of those lucky individuals that have a variable rate car loan or a variable rate uh, credit card, you'll notice the interest rate portion on your lending product will reduce as well. And for a car loan specifically, you'll see that you pay that off faster with the lower interest rates. So if you're looking to ask me any questions, you can type them in the chat. Most of the time, everyone just ends up sending me a private message as to what questions they have. Always, if you have any questions, you can connect with me on social media. You can follow me on my accounts in the links where the links are below, and be great to see if I can help you with your mortgage, whether you're purchasing or selling a home or renewing or refinancing a home. It's a great time to shop around. And as always, as I mentioned, we have programs for first-time home buyers. If you are a first-time home buyer and you're watching this episode, good for you, first of all, for being educated. And second of all, there are grants, credits, and rebates available to you if you are a first-time home buyer in Canada. Those are available for anyone who's buying a home in Ontario for the first time. So connect with me and I can guide you through those grants, credits, and rebates, and we can get you set up with those. If you're just joining me here now, I see a lot of people still joining me here on my TikTok and on my Instagram and Facebook channels, YouTube channels. The Bank of Canada has reduced the interest rates by 0.25%. This is actually also going to make homes more affordable if for the same amount of income. So when rates do go down, there is that time period where everyone that's, say, making 100 or 150,000, all of a sudden you can afford that much more house. And in that market, you're in a good situation to be able to start shopping around again and seeing what's out there. And after a while, though, the house prices do tend to creep back up as interest rates come down because people can afford more. And then those folks that are able to afford more start to outbid each other, and we start seeing prices to go back up. All right. So any other questions, please feel free to send me a private message on social media. If you want to pop one in the chat below, I'd be happy to look at that right now. But thanks for watching. Make sure to share this video with your friends and family to help them be more educated as to what happened with interest rates today, where they have gone, and what sort of products were affected by this interest rate announcement today. Mainly variable rate mortgages, home equity lines of credit, and unsecured lines of credit, as well as variable rate car loans and variable rate credit cards. And as I mentioned, with the Bank of Canada reducing interest rates by 0.25%, we will see anyone with a variable rate mortgage, either your payment or the amount of time that you have to pay off the mortgage will go down. And with a line of credit, whether it is secured or unsecured, you'll see that the interest rate or interest portion on that credit line starts to be reduced after today. You'll receive a piece of mail or a online statement from your bank with this information. And it's great news for Canadians abroad. If you're looking at buying a home, keep in mind, my name is Joe Blodek. I've been a mortgage broker in Central Ontario, helping Canadians all over Ontario with their mortgages for 14 years, and have lots of experience also with first-time home buyers and first-time home buyer programs. Be happy to help anyone that needs help with that. And if you have a renewal coming up, make sure you talk to your lender first, get the best offer that they can offer you, and then go see your mortgage broker or myself to see if we can do any better. And a lot of the times with your best offer from your lender or bank, if you have that in hand, we're able to either at least match it or for sure match it. But I love to be able to beat it. So Always good to try and see what is out there. A lot of these lenders do pay for the legal fees and administrative fees and for appraisal fees to switch everything over. And you can enjoy a better interest rate, paying less money on your mortgage. So thanks for watching today, everyone. I see I still have a lot of viewers tuning in here right now. If you're just joining me here today, the interest rates were reduced by the Bank of Canada by 0.25%. My name is Joe Bladek. I'm a mortgage broker in Ontario, Canada. Been helping clients with their mortgages for over 14 years, and I look forward to helping you and your friends and family when that time comes. Have a great day. Check out my links below where the